So how connected is the inflation rate and mortgage rates? That's up next. Hi, welcome back. I'm here with Ryan Smith with Guild Mortgage. Always great to have you here.
Thank you for having me.
Yeah, well, you're talking about some deeper things today that we really want you to try to understand. So stick with us, and Ryan's going to make it user-friendly for us. So what we want to try to talk about today is inflation, which we are experiencing.
Yes, we are.
And it's across the board, and everyone's feeling it everywhere. But how is that connected to the mortgage rate? So that's what we want to know, because we hear a lot of times of misinformation or super quick snippets that might not be exactly correct. So Ryan's going to break it down for how it really works today. So let's talk about that just initial connection maybe.
Yeah, so the general feeling right now is we're in an elevated rate environment, both from short-term interest rates and fixed rates. So 30-year fixed rates are in the low sevens as we sit here today. Mm-hmm. And you have your short-term interest rates that are at record highs in my lifetime. And the reason they're at record highs is because the Fed is raising those rates, which is called the Fed funds rate, to try to slow and curb inflation. When they do that and you see inflation start going down, you're going to start seeing mortgage rates follow with that. So anybody that's sitting on the sidelines can expect mortgage rates to decrease in the coming years. We don't know when that's going to happen, right? Mm-hmm. There are a lot of variables that go into this. Right now, the idea is we have a lot of people that are waiting to buy a home. And that not necessarily is a great idea, because when rates start going down, mortgage rates, a lot more buyers are going to come into the market. Right. So our advice right now is that as you see inflation go down, you're going to see mortgage rates go down, and you're going to see a lot of buyers come back in the market. So you want to take advantage of what we have right now and then be able to capitalize on those lower rates after you've already bought your property.
So think about that. What he just said, if you're a buyer out there, you've already experienced this supply-demand issue that we have. Like, I have several buyers right now that would love to get into a home. Yeah. We just can't find one.
Right.
And then if you remember, a year, 2, 3 a year, about at this point, the big, just overpriced, overpaying battle just to get into a home. We're not really seeing that right now, but it's still multiple buyers per property. So if what Ryan is saying is what happens, they'll think about that. You're basically back in that same boat yet again. So getting in now where there's not as many buyers, if you can, might be the thing to do, of course.
A lot of people think that 5.5% is an acceptable mortgage rate. So the idea is that we're probably going to see 5.5% in the coming years. There's no guarantee on that. But if we do, and everybody thinks 5.5% is an acceptable rate, everyone's going to come for that 5.5%, which is going to create an even further supply and demand problem on the homes.
Exactly.
The supply and demand problem with home inventory is not going away anytime soon. That is predicted to be a 5 to 7 year window of time. Mm-hmm. So if you plan to own a home, I would say get in the market now. And actually, here as we sit, we're entering into the fourth quarter. We're going to be going into winter. There are going to be less people out looking at homes. Now is your time. If your rate is 7.25 right now, you will get the lower rates as they come available. Okay. And we actually offer a refinance program where we will charge them no new lender fees if they refinance on their home loan before 2025 is over with. So, get into a home now. Start to build equity, mm-hmm. and then it'll feel great when the rate goes down.
Exactly.
It'll feel like you got a raise.
Well, you will get a raise,
exactly.
Basically. That's right. More money in your pocket. And getting in now, getting into where it is, refinancing then, again, in that time span, whether it's 2 years, 3 years, 4 years, whatever it happens to be, because our crystal ball, it broke, right? Did yours break? I never had one, I don't think. But whatever it ends up being, you will have that equity already built into your property on top of a lower rate and a lower monthly payment. Or you can even keep at that regular payment that you've been used to at that lower rate, double pay, and pay off sooner.
Yeah, the idea here is that if you look at the history of real estate in the United States, it always goes up.
Right.
But during periods of time, it will go down. So over time, the graph shows that property values go up. I'm not advocating that your value is just going to always rise. It's going to dip a little bit here and there, but based on history, it will trend up. So if you buy a home and your rate is in the sevens, When rates go into the 5s or even in the low 6s, and you're able to capitalize on that, there's a good chance that that property maybe have gone up 5, 7, 10% at that point. So what we're advocating for is buy a home, gain that equity, start building that equity, and then get a raise when the rates go down.
Exactly.
Okay? The 30-year mortgage is the best financial tool I think that anyone can use. And the reason is you lock in your housing expense, and it will be the highest you'll ever take on. Now, the variance there is if your property taxes or your insurance goes up. But the actual mortgage payment, you can lock in, and you know for the rest of the time you own that home, that's the highest your payment will ever be. That's pretty spectacular if you think of it that way.
That's amazing. So really think about what he just said. You're getting in at the lowest you will ever get in, and
The highest.
The highest you'll ever get in,
Yeah.
exactly. And it's all going to just go from there. So that still equals more money in your pocket.
Exactly, yeah. And, you know, we want to get the equity in your pocket versus you waiting until rates are 5.5, and then you're putting that equity in someone else's pocket when you buy that property.
Right. So when you're watching the news and you're listening to the gurus out there and they're saying, you know, oh, inflation's up, this is up, this is up, the world's ending, that type of thing, connecting that again, that inflation, the Fed rate, the mortgage, and all of that, they're not one for one.
No. The Fed is raising short-term interest rates. It's called the Fed funds rate. And what that is the rate in which banks borrow money on an overnight basis from the Federal Reserve. That's going to control your home equity lines of credit, your boat loans, your car loans, your credit cards, which are all astronomically high right now. Those are rumored to not be going up anymore. Maybe one more time is what the rumor was. Okay? When they start going down, that means that inflation, the work they've done on inflation is starting to work. Okay? When those rates start going down, you'll see mortgage rates start to come down. So we don't know exactly when that will be. You know, if you look at the predictions, that may be first quarter next year, that may be end of next year.
Right.
But if you follow the people who are the gurus, as you say, they're going to be going down at some point. The 50-year national average of mortgage 30-year fixed rates is 6.2 something.
Right.
Okay. So we're about a point above that.
Yeah,
right now,
exactly.
Okay? So when we get back down to that, and then we get below that, you're going to see a lot more people coming into the market, both buyers and sellers, but predominantly buyers, because people are on the sidelines thinking that rates are elevated right now. They are elevated, but historically speaking, they're not that bad.
Exactly.
Yeah.
Okay, so hopefully this makes sense to you. And if it doesn't and you want to chat more or learn more, you can always reach out to us. The contact information is below. I am happy to help buyers and sellers and investors. And Ryan is my lending partner who's always here to answer questions and chat those pre-approval processes and just talk to you basically about where you stand, where your finances are, if you're ready to buy, how much you have to buy, and all of the good stuff that you help with. So
Thanks for having me.
of course, thanks for being on the channel, and you'll be back many other times.
Absolutely.
And again, contact below, subscribe if you haven't. New videos are coming out all the time. We'll see you next time on Living Midwest Life.